Okay, so I guess we should start now. Thank you so much, everybody, for joining today. Today's webinar is for one of the most hottest topics that's going on these days on taxes is CRA tax reviews. The people who are already aware about it, probably they know how much painful these reviews are. The people who are going to file taxes in future years, probably they'll come across these letters. I would call it sweet letters in some time. Now, our focus for today will be to understand a little bit about what are these reviews are, and a basic idea about how do you deal with them, uh, and if there are any questions, we'll address the questions as well. Okay. We'll start with the first slide. Kat, can you please? Okay, so like most other tax systems, Canadian tax system is also based on self-assessment basis. That means you assess your tax liabilities, deductions, incomes at your end, and report them on the tax return, and then report it to CRA. Now, many a times we claim some deductions, some credits that we are not eligible for, maybe due to some misunderstanding, misinformation, or sometimes we really do miss deductions and credits that we are eligible for. Now, CRA has a system where they conduct reviews of the tax returns uh, about the information that the taxpayer has claimed or not claimed on their taxes. And that's how they ensure that the taxpayers are aware about what can be claimed and what cannot be claimed. Uh, Reviews are generally issued and prepared mostly to reduce the litigations that may come later down the line, and to make sure that the taxpayer knows their responsibilities about what can be claimed, what cannot be claimed. Next slide, please, Ken. Now, one of the most question that we get that why I'm getting reviewed every year. Is there any problem in my taxes, or is there something I'm doing wrong, or somebody is kind of informing me about CRA, something like this. Now, I would say you're not alone, because every year, roughly 3 million tax returns do get reviewed by CRA. And you're not alone. You're not being picked by CRA because of just you. It's just how the system works. If you're getting picked multiple times, I would call it unfortunate that you're getting picked, but that's not unusual. There are thousands and hundreds of thousands of people who are getting these reviews almost every year. There's no criteria that they pick, but there is some understanding that we have about why people do get these reviews, which we'll be explaining later in later slides. Now, if you get a letter that your return is getting reviewed, don't panic. That doesn't mean that you have done something wrong, or there is something wrong on your taxes, or you've claimed something that you're not eligible for. It's just you have wants more information on what you have claimed. In my experience, in most cases, people do get cleared off of these reviews, and then everything settles down in a couple of weeks once you make the submission. Kat, next slide, please. So yeah, that's one of the questions that we get most of the time. Why our returns are getting picked, or why my return is getting picked every year, or what are the criteria CRA follows uh, to pick a return for the tax review. Now, this is not the complete list, I would say, because it's year's end, but this is our observation why those returns get picked. One of the most basic reason is when you are working or getting paid by a third party, let's say employer, a bank, or anybody who's paying you, and they are supposed to report that amount on your account to CRA. And if you miss that if you miss to report that income on your taxes, that return gets automatically picked by the system, CRA's computer review system. The other most common is when you claim some deductions, which based upon CRS computer review system, you may not be eligible for, then that return gets picked for review. One of the most common is many time people claim dependent credits uh, and extraordinary employment expenses. Uh, those expenses and those dependent credits sometimes people are not eligible for, then these return gets picked up for review. And your compliance history, of course. If you have been very adventurous on your taxes in the past, uh, then there are high chances your returns may get picked for these CRA reviews. And one of the most common reason for these reviews is CRA random selection. So CRA do has some system where they they pick these returns for for reviews. Uh, that does not mean that every return gets picked for CR review. There are millions of tax returns who are not which are not picked for reviews, but that does not mean that they will never get picked for reviews. They can review at a later stage as well. Okay. Uh, Most of the returns are reviewed and assessed by a CRS computer system, and there are some of them are picked by CRS manual review system. Now, at all points, we encourage and recommend all the taxpayers to keep all the supporting documents for whatever deductions, credits they are claiming for, and whatever income they are reporting on your taxes. CRA may, at a later stage, ask for any supporting documents. So it's highly recommended that you keep the supporting documents for the income and deduction that you're claiming. Next slide, please, Ken. Now, when it comes to travel nurses, because this is the platform that we are addressing, the travel nurse platform, uh, some of the most common reviews that we have observed with travel nurses and, of course, the commuters is the non-business foreign taxes paid, which means nurses and taxpayers who are working across the border and reporting their foreign income on a Canadian tax return, and as well the taxes paid to the foreign country on a Canadian tax return. These returns do get often picked for CR reviews. The other part is registered pension plan deductions. So in Canada, if let's, for example, in Canada, if you are contributing to foreign pension plan, let's say U.S. Pension plan, employer-sponsored pension plan, let's put it this way, then you are allowed to claim deductions of the pension contribution that you are doing in a U.S. Registered pension plan. Uh, it's a pretty handy tool. It does help to reduce your taxes quite a bit in many cases. Uh, then the medical expenses. Any medical expenses that you have paid from your pocket, and you are eligible to claim, but many times people do claim expenses, and these expenses are often reviewed by CRA. Union dues, the nurses, of course, pay lots of new union dues uh, for their registration, association fee, their malpractice insurance fee. All these are claimable, but again, nurses do see reviews about these expenses claimed on their taxes. Uh, Other employment expenses, that includes nurses that are claiming travel, supplies, uh, other expenses that they're paying from their pocket, which they are supposed to pay because of their employment contract, and they are not getting reimbursed for. And the last but not the least is the donations. Donations is one of the item that also gets reviewed quite often if the claim is a higher amount. Kat, next slide, please. Now, many times we do get questions about how do we handle these reviews. and what should be done to at their end, at the taxpayer's end, to respond to the information that their CRA is requesting. We'll go one by one, okay? But the most common topics that we just discussed in the last slide. Uh, about the non-business foreign taxes paid, CRA mostly is looking for a proof that whatever amount that you have claimed on your Canadian taxes, uh, that you have proof on, and how you ended up with the calculations. Now, in most cases, uh, if you have claimed foreign tax credits on your Canadian taxes, you might see a form called T2209 on the tax return package that either you have prepared online or you have a professional doing it for you. You may see that form attached to your package. If it's not there, you can certainly request from your professional or download from the online software. And a form called T2036. That's again a form that you may find on your tax package shared by the professional, or you can certainly download from from the software that you're using. Uh, the T2209 is a federal form that shows how much federal foreign tax credits you have claimed. And T2036 is a provincial form that shows how much provincial foreign tax credits you have claimed. And the second part is they would also want to see a copy of the tax assessment or the tax returns that you have filed with the foreign jurisdiction for, in our case, let's say, United States, and the copy of the state tax return that you have filed with the respective state that you're working. In many cases, people do have city tax liabilities as well. So if you have filed taxes with the city that you're working in, also make sure to attach the copy of the city tax return as well. The most important part, CRA would also want to see the tax liabilities that you're showing on all the tax returns in the US matches what IRS has assessed for you. Now, in many cases, account transcript is from a federal taxes is a good example. But if you don't have that account transcript, you can either show them the proof of the payment that you have made, or if you have received the refund, a copy of the refund check or online deposit should also work in many cases. Uh, that kind of reflects that the tax that you have filed are assessed the way you have filed. For example, let's say if you have claimed $100 of refund on your US taxes, okay, on a federal tax return, and you have received the same $100 in your bank account, that gives us a nice idea, and the CRA, that your return has been assessed the way it was filed, and the taxes that are paid on US tax return are correct. Uh, can you do the next slide, please, Kat? Sorry, I may go back to the previous slide, please. There's a little important point that I wish to mention here. Now, in some cases, I have seen people do receive less or more refund instead of what is set on their tax return. In these kind of cases, I generally recommend to contact CRA or a tax professional to see what was your exact tax liability, so that you don't see a reassessment at CRA's end. Next slide, please. Now, the next topic we had that's most gets reviewed is registered pension plan deduction. People who are contributing to for a US registered pension plan, in most cases 401k or 403b plan, you are eligible to claim that registered pension plan deduction. Now, in these kind of cases, let's say if you receive a review for questioning about your foreign registered pension plan deduction, a copy of a form called RC-268. That form is generally prepared when you are claiming the deduction. In most cases, it should be shared by the professional that you're hiring, or you can certainly download from your online tax utility. A copy of this form and a copy of the W-2. These two documents should be good enough support your claim for the registered pension plan deduction. In many cases, I have observed people do miss to completely fill this RC-268, and some columns are left blank. CRA may disallow the claim if the RC-268 form is not complete. So make sure when you're sending this RC-268 to CRA, make sure it's 100% complete. Next slide, please. Okay. The other thing is one of the most common reviews that people see is medical expenses. If you are claiming the medical expenses, make sure you have all the receipts for those medical expenses that you're claiming, including the receipts for yourself or your spouse or the dependents that you have in your family. Uh, the receipt should show that the amount of expenses that you have claimed, and in many cases, people do have insurance, medical insurance, and the amounts do get reimbursed by those medical insurances as well. Now, in those cases, you can only claim the portion that is not reimbursed by your medical insurance. You can only claim, in many cases, there are deductibles to pay. So anyone, uh, any amount that you are paying from your pocket as a deductible, you are eligible to claim some of those amounts. I have seen people claiming the full amount on their taxes, even though the part of the medical expenses was reimbursed by their insurance companies. In these kind of cases, uh, people generally see reassessments happening at CR's end. Now, if you are sending a statement from the insurance company, make sure the statement should show the patient's name, amount paid, and the name of the drug that you are claiming. Now, what I have observed while looking into these statements, that many a times people forget to claim the insurance deductible for their kids or their spouses, just to make sure that you are eligible to claim medical expenses for your dependents and the kids. And the other part is people are allowed to pick a 12 months period. Now, the period has to end in the current tax year for which you're filing. For example, let's say if you're filing for 2023, uh, now you can pick any period that ends in 2023 and back it to 12 months. For example, let's say I can go 31st March 2023. That's my ending date, and my start date will be 1st April 2022. It appears to fall in 2 years, but you are allowed. This gives the flexibility sometimes to claim more expenses because there is a threshold which is 3%, or I think there is a roughly of 2,400. I'm not sure. Uh, this is the minimum threshold. So anything less than 3% of your income, uh, you cannot claim as a medical expenses. So sometimes people do have that flexibility of 12 months, and they came back with a higher deductible, higher medical expenses. Uh, Next slide, please. Now, one of the most reviewed topic here is other employment expenses. Now, professionals, nurses, and other taxpayers who are paying expenses from their own pocket because of their employment contract, but they're not reimbursed by their employer. Uh, they are eligible to claim those expenses on their taxes, provided their employer issues them Form D-200. It's called Declarations of Conditions of Employment. It's, I think, roughly 2-pager form or 3-pager form that shows what were the agreements when you started your job. In most cases, nurses who travel because to see their patients and because of their job, uh, those are the nurses I have seen claiming their travel expenses, gas, parking tickets, and whatnot. Now, in these kind of cases, here I do expect to see Form T-200 signed and dated by your employer, of course, filled by your employer as well, and a form called T-777. This form, if you have claimed the any other employment expenses, you would find that form in your tax return package, or you can download from your CRA, online utility that you just used for file taxes. And if you don't find it, if you have tax professional, just contact the tax professional. They should be able to give it to you. Uh, Apart from these two forms, CRA would also want to see receipts of all the expenses that you are claiming. Uh, that's something crucial to claim all these expenses. So the next type is union dues. These are the most common deduction that almost all the nurses claim is called union dues. All the expenses that we are paying for our association, malpractice insurance, anything that any dues that you're paying to keep your legal status in your profession, that's claimable. And you just need a proof of receipt or payment confirmation from your association or wherever you're paying as a proof. And then you just send it to them and it should be good. There's no form required because there's no format. You just claim these expenses as a line item on the tax return. So you just send these receipts and should be all good. Donations. You are eligible to claim donations that you are making. The donation, CRA do expect to see donation receipts that should show the name and address of the donation and organizations, the date donations was made. And one of the most important part is the donation should be Canadian donation with that has issued official tax receipt. That's very important. Now, if you are working in the U.S. and you have made some U.S. donations, uh, those donations are also claimable as long as you have. Next slide, please. Okay, next slide, please. Okay. Now, after understanding what we need to respond to and to support our claim, how do we prepare those responses? How do we prepare the combined package and submit it to CRA so that they accept the submission? Uh, I always encourage to prepare a nice cover letter that explains how and what amounts we have claimed. Uh, in our office, we generally name all the pages and index them, what all we are claiming. Uh, CRA do expects to see your social insurance number written on all the pages and the reference number. So whenever you get a review letter from CRA, generally you would find a reference number on top of the first page. They would want to see the reference number written on each page of all the pages that you're submitting to them. Now, many times it's easier to submit online, but sometimes people don't have their own online account, or they find it more challenging to merge all those PDFs in one file, or sometimes the files are so heavy that CRA portal doesn't take it. In those kind of cases, you can either mail the complete package to the address given on the CRA letter, or you can fax it. Either way should be okay. Generally, you would see the fax number on the serial letter in most cases. But if there is no fax number, then mail or online submission are the only options. Now, my team has pointed out, this is not me, my team pointed out the most common three errors that we found out that people when they file themselves about deduction that we claim. And just to educate people out there, that people do, you are allowed to claim a 401k plan deduction as a registered plan deduction, which we discussed a few minutes ago. But if some people, if somebody has a 401k Roth contribution plan, that plan is not deductible in Canada and not in the US as well. So when people see, hey, my 401k plan contribution is there, but if they have a Roth contribution plan, that amount is not deductible in Canada. So if you do have and have claimed it in your Canadian taxes, you may see that disallowance by CRA. Now, one of the other most important, not most important, common mistakes that we have found among the people who file themselves is when they have multiple jobs in the US and they are contributing to Social Security. Let's say, for example, in 2023, the maximum contribution to Social Security was $9,932.40. Anything, any contribution beyond that amount, you are allowed to claim as a deduction, as a refund from IRS. Many times people do forget to claim that refund, but CRA will not allow any contribution beyond $9,932.40, even if you have claimed the refund or not. Okay. Now, the other part is like, I think I explained a few minutes ago that the portion of medical expenses, you can only claim that is not being reimbursed by your insurance. Any amount that is reimbursed by insurance, you should not claim it. We have seen people claiming the full amount, even though the amount was reimbursed by their insurance as well. Some of the common mistakes that we found that people are claiming as a foreign tax credit on their Canadian tax return. Most common is investment tax credit. If you have investments in the US, in many cases, you may end up paying additional investment taxes in the US. That additional investment taxes are not claimable in Canada. Sometimes people do pay sales taxes. Sorry, sales taxes are not claimable in Canada. Property taxes, foreign property taxes are also not claimable in Canada. Now, the other most important errors that we found while looking at the taxes is sometimes people do pay taxes on the income on the US side, but that income is exempt in Canada. So if you paid any foreign taxes on any income that is exempt in Canada, those taxes will not be allowed in Canada. The most common is tax-free savings account. Any money that you make in a tax-free savings account is taxable in the US, but not in Canada. So if you are claiming any taxes that you have paid on the income that's getting taxed in the US on tax-free savings account, that may be disallowed. The other part is foreign pensions. If you are a Canadian resident and you're getting Social Security and other income, that is taxed. Just Social Security is taxed in Canada only, not in the US. Many times people do claim file taxes in the US and claim Social Security income as taxable, even though they're a Canadian resident, and then they claim the Canadian taxes on the Social Security taxes, but it gets later on disallowed. The other most common is capital gains. We all know a part of capital gain is taxed in Canada. So let's say if you're making $100 of capital gain before the June 2024 changes, 50% of the total capital gain was taxable, which means if you made $100 of capital gain in the US, and that $100 is taxable in the US. At the same time, if you are reporting $100 of capital gain in Canada, only $50 was taxable. So which means only 50% of taxes what you pay to the US will be allowed in Canada. What I have seen people claiming the full amount, whereas they are only eligible to claim the half of the amount only. So this is the time people may see a disallowance by CRA. Next slide, please, Kat. Now, one of the very most important part is make sure whenever you get the CRA review, you respond to the CRA review within 30 days. If you need some more time or you're unable to respond, in my experience, you're always allowed to call CRA tax center that they're working on your review and ask for extension. In many cases, we have seen tax centers do allow extensions, and they for additional time to respond investment. And in our experience, working through those reassessments are very challenging because they take quite long.
Sorry, would you be able to repeat that one there? It just kind of broke up like a technical glitch.
Oh, sorry. The last part, the last slide. Okay, so whenever you get the CRA review, the most important part is you must respond to the reviews in 30 days. This is the most common timelines we have seen over the years on those CRA reviews. The recommendation is to either respond to the CRA within 30 days or call the tax center who is working on your CRA review and get an extension. In almost all the cases, you would find the contact number of this tax center that is working on your review and get an extension. If you don't respond to the review within 30 days or the timeline that is given on the letter, the return then goes to a reassessment, and then reassessment generally is to disallow the amount that you have claimed on your taxes and which was being reviewed. That does not mean that it's end of the world. You can still question the assessment, but that takes months to resolve, which could have been resolved in a year or two. That's all for me for today. I hope I was helpful enough to
Perfect. There was a little bit of technical glitches, but I think you pretty much covered everything or fixed itself. I think maybe if there's any questions from anybody, you can type it in the chat or you can unmute yourself if you're ready for them, Karan.
Yes, shoot it, please.
Okay, and if it's anything that it's like it's going to be very, very in depth or a future webinar, we can cover that or come up, jot it down for the next one.
Yeah, of course, of course.
I had some questions actually. Maybe I can get it going.
Please.
So, one thing I was curious. Oh, here we go. So Alvin asks the $9,932 limit for W-2 limit. Is that in USD or CAD?
USD.
USD. Ah, yeah, there we go. My question was kind of more about the travel mileage. And if you can claim things like auto repair or oil changes, like maintenance things, or is it just like the IRS mileage?
I think we are covering the Canadian part at this point. Is that the Canadian type question?
I'm not sure. I'm not sure. Just in deductions in general.
Okay, so both sides are different. So I'll address the Canadian part at this point. Okay.
Yeah.
So you are allowed to claim expenses that are part of your contract. So let's say if your contract is to visit patients every day or every other day, and then your employment contract states that you're obligated to use your own vehicle at your own expense, then yes, you can certainly claim all those oil changes, anything that happens to your vehicle. Now, just keep in mind, CRA do expect you to maintain a log that shows how much vehicle was used for personal and how much vehicle was used for business purpose. There is a template that for the log I can probably share with you, and then you can share with your group as well to maintain that log.
That'd be good. I think I claimed mileage too because I guess my agency was based in Boca Raton, Florida. And over 6 months, they sent me to 2 different hospitals as their clients. And so I was definitely traveling for work. So that worked out well. Okay. And then let's see here. Now, just curious about what you meant about US donations. I know in Canada they have to be registered. If if you're in the States, you might come across different things that you want to donate to. So are they really not claimable in Canada, or only on one side, or not at all?
There are certain, in most cases, you are eligible to claim registered charities. Uh, but the most common I found GoFundMe, that's not claimable in almost all the cases.
That makes sense.
Mm.
Okay. And medical insurance, is that something that we can claim as Canadians going to the States?
Yes, if you're paying from your pocket, you can certainly claim medical insurance.
Any other questions from anyone? If you're shy, you can use the chat.
Or you can send me a follow-up email if that helps.
That's true. That's true. Oh yeah, do you want to put your contact information in there, or is it on the last? Oh, it's not on the last side. If you put it, if not, I can put it in the video. Oh, and somebody put, I was going to ask about medical insurance. we Canadians
Okay.
don't like paying.
Yeah, I know.
Yeah.
Especially medical insurance. I mean, we pay such a high medical insurance.
Yeah. One thing I had a question about was, let's say you wanted to get something covered, but you need to file that T2200 to your. I found when I tried doing that with my American agency to get some things covered that was for work, they had no idea what this Canadian form was.
Yeah.
Now, I think I read a case that was like, if you submitted it, if you really tried to get them to fill it out, then, you're kind of, exempt, but if you didn't even bother, then, it might get thrown out if it ever, got
Yeah.
on it. Is that kind of?
Yeah, that's a little unfortunate, the requirement. And in the case, because employer, in most cases, they have no idea what this form is. And sometimes they are hesitant to sign anything that they don't understand. But yeah, that is a requirement, unfortunately, and CRA in almost all the cases would want to see that form signed and dated by employer. I know it's unfortunate, but that's how it is.
And this one gets asked a lot because I think people are kind of sweating before they ask it. Stipends, definitively not taxed in Canada and the US, right?
I would say incorrect. Stipends are taxed in Canada in most cases. Uh,
Really?
yes, in most cases, not in the US.
So if the stipends are like, you meet all the IRS criteria, and then when you get your W-2, they're not even on the W-2. What about in that situation? Because that's how most of them, I think, pay us travel nurses.
Yeah, in those kind of cases, we generally work case by case. We work through their pay stubs, or their summaries that they're preparing. But it's a very what do you call it? It may need another webinar on just on the stipend, because it's a very detailed question to answer.
Okay, we have our next one. Any other questions from anyone? I'll give it like a minute. Okay, if there's no other questions, I guess the last big one would be if you filed on your own, or you filed, and it's not going well or something like that, and they want to come to you to fix it and kind of dump the documents on you.
Yeah.
Do you have like a rate for that, or what should they do? Just kind of reach out to you and that's that, or?
Yeah, so especially for a travel nurse group, Facebook group, and the Insta group operated by CatN, we are offering 50% off, which is roughly, which brings it, not, oh, I'm sorry, we are pricing it to $50. The standard price is $150. So if somebody is coming for the year tax 2023 and 2022, if they have CRA reviews, we should be able to handle for them at a very reduced price, provided they mention this group's name.
That's pretty awesome, because I mean, it's the phone call alone is worth $50. I do see Alvin asked here, how to turn housing allowance or housing rent into stipends to reduce tax. Does a longer contract work better versus shorter contract on this matter, because rent is so expensive?
I think we can cover this question in the next webinar for the
I
stipend.
think stipends are gonna be a big webinar all on their own.
Yeah, yeah.
Sorry, but Alvin, you can probably email him, you know, and clarify a paragraph kind of question there, what you want to know, if that's
Yeah,
cool.
because there's a lot more I need to ask to understand the situation and then probably answer the question.
Perfect. Okay. Well, if not, this has been lovely.
Okay, thank you so much, everybody. I think it was a great session, and hopefully we'll see another one soon. Thank you so much for all the questions. I hope I was able to answer. And yeah, enjoy the coming weekend.